Traders, because of any coming to you from theclosingprint.com, February the 7th, 2021. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week, led by small caps outperforming and at 52-week highs and all-time highs. FANG and growth stocks that we follow are all higher as well, while bonds, sentiment, and breadth have all improved. The sectors are also improving, mostly bullish, with international markets improving substantially from the week before. So we're leading into the week with 18 bullish indicators, 1 neutral, and 1 bearish. That leaves us with bullish short term with the S&P 500 above critical support. We see a range from 3,700 up to 3,900 into February OPEX. And we also have Bulkowski showing 4 or 5 green with a CPI signal, green and bullish since January the 22nd, with 8 bearish patterns, 33 bullish patterns, and 90 patterns waiting for breakout. Coming into this week, last week I threw on a linear regression line where we look for price action to be above and below as the cycles and higher highs and higher lows perpetuate. There is a possibility that we could pull back a little bit, but RSI is above 50, looking very strong. Volume has picked up, MACD is crossing, and stochastics is above 80, which leaves us with a bullish picture going into this next week of trading. The Nasdaq 100 2 weeks ago did take something of a beating, but finished this week with a positive follow-through, up over 100% from the March 23 lows to the present highs, with the top 15 weighted Nasdaq stocks also above their 21-day and 50-day moving averages, with the exception of Facebook, Qualcomm, and Tesla, which sits right at its 21-day. As we start the week, looking for either a follow-through or a small retreat, but certainly very bullish coming into Monday. All of these indices are being led by the IWM Russell 2000 ETF. You can see in the upper panel the outperformance since we broke out back in November. IWM continues to outperform, and the nice correlation with that outperformance in IWM versus the S&P 500. We also have the 10-year yield overlaid, which has a nice correlation to the small caps as the 10-year yield continues to rise, signaling bullish returns for the IWM and the markets as a whole. In addition, as we start trading this week, we have breadth improving. This is the advanced decline percent, S&P 500, the middle panel, mid caps, small caps, and large Nasdaq in the lower panel. All of these indicators pointing to breadth improving, but not overbought, above the plus 30% level, which we can detect in the McClellan oscillator as well for the Nasdaq, starting to turn and bottom, while the McClellan oscillator for the New York Stock Exchange, more than 2,700 stocks, also gives us a potential trough and improving breadth, coupled with additional measures with new highs beating out new lows as histogram continues higher, the moving averages turning up, signaling a more bullish follow-through, looking nothing like February, while the advanced decline in the middle panel continues higher, showing us more advancing stocks than decliners. Bullish percent also not overbought, moving from an oversold condition higher last week. We also had non-Pom payrolls growing in January. It was half of what was expected, of course. This is from Mary McDonald over at Stock Charts, together with weekly jobless claims that came in slightly less than estimated. Housing starts have also grown sharply over the last few months. I don't need to tell you how strong they are, but we can see that on the coronavirus dip that we're all the way back above where February levels were for new housing starts and continue to ramp higher. So there's more upside potentially in home builders and the construction industry, which is an economic indicator of its own, which we'll cover in a few minutes when we talk about commodities. So we truly are starting off the week with a more bullish tone. This is the VIX flipped on its head. This indicator, when green, tells us to look for higher highs and higher lows on a 60-minute time frame, while a daily plot of the VIX shows that we're at the bottom of a recent range, always with the potential for a bounce from any catalyst or news event that we haven't already anticipated, which could adversely affect volatility. In addition, back in March, we were looking at the ratio between the VIX and the 10-year yield, which did indicate, as the Treasury yield dropped, that the result reflected a flight to safety. February, March, now we have the exact opposite, and as we revert back to mean, there's potential for this ratio to drop even further before getting to a level where we need to look for a reversal and overbought conditions. So long as this ratio drops, we're bullish equities, as we've seen in previous occasions where this is the case, where the vertical lines line up with a drop in the 10-year yield ratio with the VIX. Each time this has dropped, it's led to a follow-through and bullish activity. We also told you last week that the S&P 500 equal weight index, where no stock is more important than any other by weight, was bouncing. We had a buy signal. CCI had turned higher, has yet to get above plus 100, where we start to look for consolidation. In each case, we've led higher, and where the number of stocks trading above their 50-period moving average reached a recent low, coupled with a CCI signal, it led to a follow-through in each vertical line, indicating that we could see follow-through while we look for a breakout this week, as the jobs numbers suggest that more people are taking jobs, especially millennials coming out of college, where many have analyzed the data suggesting that millennials will comprise 75% of the workforce in the next 5 years, in addition to the fact that millennials are more apt to invest in the markets, as we've seen recently with GameStop, AMC, Bed Bath & Beyond. Despite how you might view the activity, the point is that the millennials are very well educated, and participation numbers increasingly suggesting they're investing in the markets at a time when people are getting very bearish as we approach those recent highs. Additional measures that suggest bullish activity in the equity market can be seen with the bond stock ratio, where this ratio continues lower. That's telling you to favor equities over bonds. As we can see with the 20-year weekly chart, TLT continues to trend lower, while the 7-10-year IEF ETF continues lower as well, counterbalanced by the 10-year yield. As bonds move lower, yields move higher. We're approaching the level where coronavirus hit at about 1.45%, closing last week at 1.37% on the 10-year yield. Each time the markets have bounced in the 10-year yield, that led to bullish follow-through in the indices, yet another catalyst for higher prices in the equity market, indicating investors' risk appetite is risk on. Additionally, we see that with high yield corporate. As this ETF continues higher, that's bullish for equities. You can see what happened back in February and March of 2020. That looks nothing like the current state of HYG or that of junk bonds, which are moving higher. The additional lines, green is the IBB, biotechs, IWM, and blue being USO. When all of these are moving higher, this is telling you it's a risk-on market. that equities will most likely continue higher. Doesn't mean we go straight up. It does mean, however, that we'll see higher highs and higher lows. All four of these indicators being a risk on, risk off alert mechanism. In addition to what I've already mentioned about housing, copper used heavily in construction is basing looking like it's going to follow through this week and break out again like it did back in November after the previous 14 to 16 week base led to a breakout and a bullish continuation in construction. That can also be seen in the monthly chart, which is showing these legs higher that corresponded with a bullish equity environment, while gold continues to move lower, which is showing you there's no safety trade at the present time. These indicators, coupled with the bullish correlation to equities in Brent crude and light crude, showing a bullish breakout and a follow-through, also bullish for equities. Finally, we have currencies. This is the British pound US dollar pair, continues higher and bullish, despite the fact that the dollar has been strengthening of late. Finally, we have the US dollar Japanese yen pair, the other side of the coin, which tends to see the yen weaken when global economies are strong and stock markets are moving higher. We saw that back in the years following the Great Recession, where this was evident. The yen was moving lower, losing its value against the US dollar as the global economy recovered. We're starting to see the same thing now as the markets trade at all-time highs. The sector heat map is improving markedly from the previous week. As we can see, energy increased quite a bit last week as well, while the international ETFs also showing a market increase from red crimson to yellows and lime greens. Real estate shares also moved higher. The sector was up almost 3.5%, bullish and above its 9 and 21 day. Transports improved by 5.73%. Materials were up 4%, while energy was up a whopping 6.77%. While the communications sector were up 6.77% with a very bullish follow-through, and energy was up over 8.25%. Financials were also very strong, up 6.7%, followed by industrials at 4%. XLK Technology nearly finished the week up 5% as well, looking very bullish and a nice trend. Consumer staples lagged a little bit, but was up 2.5%, and utilities up 2.32%. Both staples and utilities deemed defensive in nature, but they added to the S&P 500's bullish follow-through, while healthcare was one of the more weak sectors, despite what we saw in biotechs. Consumer discretionary is outperforming, up 6.31%, while the ratio between consumer discretionary and consumer staples continues to give us a bullish indication. Looks nothing like February or late 2018, where the Fed raised rates too quickly, and the coronavirus in 2020. Looks nothing like that now, giving us an indication institutions are bullish. Please note that we do have quite a few stocks that are showing relative strength and bullish setups going into the week. IBD 50 stocks showing relative strength, stocks showing rising profit estimates in green. The Dow Industrials, almost all of them look bullish going into the week, and some stocks from the scans as well as the ARC-G and ARC-K, and stocks that are in both in cyan from the ARC-G portfolio as potential trades. For new entries in the IBD 50 or stocks that are listed in the opening monologue, what I'd like to see is price action close to the 9 EMA or the 21 day, bouncing with RSI above 50, volume increasing. As we can see with Google, Alphabet, price action gap and go, looking for a follow through, draw a trend line through the lows of these 3 days. That's your stop. with volume increasing, MACD above its signal line, and stochastics embedded above 80. Alcor International meeting all those criteria, following through. Gap and go, volume increasing, showing institutions have been picking up shares over the last 4 trading days. MACD cross and stochastics embedded with RSI above 50. Builders first source, remember construction, copper, all of these indications that global economies are improving. We're looking for a breakout of this range in BLDR. Take the depth of the pattern and add it to the breakout for your first targets, with RSI above 50, volume increasing, MACD crossing, and stochastics showing plenty of upside potential. CRNC from previous IBD 50 stock lists and watch lists. This looks like it's getting ready to break out. RSI above 50 and rising. MACD's turning, volumes increasing, and stochastics turning at 50. Chegg looking for this to continue higher. Volume increasing, showing institutions are present. MACD's turning and stochastics is rising. Home builders are very strong. New home starts. If you own a house, you know what I'm talking about. The market is increasingly bullish, looking for a DHI to continue higher. DR Horton, DHI. Digital Turbine, also a gap and go candidate, following through. Looking for a little flag or maybe some inside bar on Monday, Tuesday for potential entry. Volume increasing, showing institutions are the ones picking up shares. Stochastics rising, MACD crossing. Dropbox also looks like it's going to break out this week. RSI above 50. Volume increasing, MACD crossing, and stochastics rising, along with ATR in the lower panel, showing we should anticipate more days like this with a big range. Dynatrace, many of you chasing this one last week. Looks good, but I'd like to see a little pullback to get into it. I don't know if we'll have an opportunity. This looks super strong. So if you're in it, congratulations. As the volume suggests, institutions. Etsy also showing exceptional strength. You can see these waves. I prefer to buy the dip in the wave rather than the high of the wave because the potential is this could pull back, but it still looks very bullish. RSI is above 50. Floor and Decor, another construction related name, following through off the 50-day. RSI is rising. Generac Holdings, this looks really good off the 9 EMA. If it doesn't get too far away from Friday's close, this should be a good entry. Looking for a follow through. MACD is about to cross. Momentum is increasingly more bullish. Stochastics is rising and RSI is above 50. Innovative Industrial Properties, this company buys and then leases back climate controlled warehouses to the cannabis industry. Looking for a follow through on the breakout. Ligand Pharmaceuticals continues to move higher. Volume suggests institutions. MACD is above the signal line and stochastics is rising. Logitech showing up on several scans and lists this week. Continuation of this nice bullish trend. RSI is above 50. I would like a little bit of a pullback for better entry like we saw on Tuesday and Wednesday. Other than that, it looks very strong. Looking for a follow through. Meridian Biosciences. A lot of these biotech stocks moved higher last week. Vivo is another. On the breakout, volume increasing, MACD crossing. Don't chase it. Look for a flag potentially for an entry. 1-800-Flowers giving you this pullback as a potential entry for a $30 stock. Not bad. Should continue higher this week into Valentine's Day. A lot of people will probably buy this stock. With that in mind, stochastics oversold, getting ready to turn. Last time it did that, we can see that back in mid-December. What it led to, a nice appreciation in the stock price. PTC continues this nice bullish trend. RSI is above 50. Anticipating that'll continue. Volume increasing, showing that institutions have been picking up shares, even while at 52-week highs. Biotechs and pharmaceuticals performed quite well last week. Looking for Pakira Biotechs, biopharmaceuticals to continue higher. PCRX, nice follow through on volume. MACD turning, stochastics rising. And PayPal out with earnings inside day on Friday. Looking for a follow through, gap and go. As long as it holds these lows, make sure you just connect these wicks. That'll be your trend line for a stop in the short term. Looking for a follow through this week. Repligen from last week's continuation on the watch list. We got the 50-day price back above the 9 and 21 day, and then it took off on Monday and didn't look back. just as we appear to be breaking out to 52-week highs. SCPL could work this week as well. We are looking for a follow-through 9 and 21 day. MACD is about to cross, volume has started to increase, and stochastics is pointing higher. Scott's Miracle Grow looking for a bounce at the 9 EMA. Southern Copper, remember what we said about the copper prices looking like they're going to break out. This looks really good as a commodity play. Looking for the breakout this week. RSI is above 50. Volume's increasing, MACD's turning, and stochastics is rising. Taiwan Semiconductor looking for strength in semiconductors this week. If we can push off of this level, I'm watching Intel, Marvell, Nvidia, Broadcom, and others. Texas Instruments potentially for a bullish continuation. We can see on the little flag that volume had tapered off. That's a good sign as we watch for the same thing in Texas Instruments. Trade desks just been hanging out at the 50-day. I got a feeling this one's going to explode in the short term. Volume coming in, institutions have been picking up shares as it just meanders along the 50-day, just above the 9 and 21 day. Those are about to cross in a bullish direction. Look for a follow through in trade desk in the short term. And Trex, another building supply related name, construction, looking for a follow through. And Viva Systems looking for a breakout this week. Some additional stocks from the scan of rising profit estimates candidates. AMRC looks good. Axon, AXON. BL, Etsy looks good. HI, IIVI, also rising, looking for a good setup. JD.com looks good. Coming out of this little tight consolidation, looking for a follow through. LAD, Lithia Motors, the EV vehicle market, looking for a follow through. Along with STRL, which recently pulled back, looking for a follow through here as well. Additional stocks from the relative strength scan. Abercrombie and Fitch. We also see Callaway Golf, ELY, looking very strong. Fuel Cell, JOE, Joe, looking for a follow through. And St. Joe's, breaking out of this nice consolidation. Depth of the pattern is the likely first target. All of these stocks looking very strong last week. That would be in addition to the stocks from the Dow Industrials that look very strong. Apple, American Express, Caterpillar, Cisco. Chevron looks good. Disney looks good. Goldman Sachs, IBM, Johnson & Johnson, Coca-Cola, 3M, Microsoft. All of these look good for a follow-through. Nike, Procter & Gamble, Travelers Insurance, Verizon, Walgreens Boots Alliance, WBA, Walmart, and ExxonMobil all look like they're going to follow through this week. Finally, if you're like some investors, you don't want to be too involved in the markets, maybe this describes you. You just want to buy a fund or an ETF and let your money appreciate. I would suggest a couple of the ARK funds. ARK-G, the Genome Revolution, multi-sector. Kathy Woods is managing. That one looks really strong. There's a few names on that list that look very good as well from her recent purchases and additions, like CRISPR, CRSP, right at the 50-day moving average. I really like the pullbacks here for a potential entry. As volume begins to pick up, we're probably going to see this get back up to the highs. Fate Therapeutics, I think this is like number 6 or 7 on her list that she's added recently. Looking for a follow through. And Pacific Biosciences, which we've traded recently, holding right at the 21-day moving average. Believe it or not, this is number 1 on her genomics list. Looking for this stock to break out in the short term. I know Ali, you're in this one. She also has a decent position in Teladoc. This looks good for a follow through. RSI is rising, volume increasing. MACD is above its signal line, and stochastics is headed higher. And you have Twist Biosciences. I'll be interested to see if Kathy picks up shares in Twist on this pullback. Volume was above average on Friday, so we'll see if this retests the 50-day or some previous support resistance levels. And if genomics isn't your thing, look for the ARK Innovation ETF to continue higher. She's got some really great ideas here. You could also buy some shares in this and just let it appreciate as we follow through after this dip to the 21-day. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com this February the 7th, Sunday. I hope you had a good weekend so far. We'll send out a watch list later tonight around 11:30, maybe 12 o'clock on the East Coast, maybe about 9 o'clock on the West Coast. So be sure to look for that in your inbox. Otherwise, I hope this helps. Take care, and we'll talk to you tomorrow during our live broadcast.